Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for September 9th, 2018. Hope everyone's having a great weekend so far. Let's take a quick look at how things finished off on Friday. Early Friday morning before the markets open, we did get the employment situation report out. It was another strong jobs report. This time around, the only difference was we also saw some growth in wages. It was a 2.9% growth in wages, which is good news overall. But as often happens with the jobs report, the markets react a little differently. And this time, we saw a bit of a sell-off. The Dow was lower by 79 points. The S&P 500 was down 6 points. Now, this has been a nice orderly retracement back to that upsloping 20. But when we look at the weekly chart on the S&P, here we did see a close below a previous low for the first time in a while, and that usually indicates a move back towards that 20. So we could continue to see selling this week. What is going to be important to watch is Friday's low here. Will it take out the low and continue moving on? That is the big question. Similar picture with the Nasdaq. Now we've seen a tech sell-off this week. There it is. That 20-period moving average has even flattened out. The sell-off has been pretty significant this week. On Friday, the Nasdaq was down 20 points. Again, on the weekly, you can see a close below a previous low. So any trade below Friday's low here and this weekly low, I should say, and we should see a continuation at a minimum back to the 20-period moving average that lines up nicely with this previous high. As far as the Russell 2000 goes, the Russell on Friday was down a little over a point. Now, the bond market sold off after that jobs report, and more importantly, if you look at the yield on both the 2-year and the 10-year, both saw a spike. The 2-year is at 2.939 and the 10-year is at 2.941. They're virtually equal. And so as the shorter term yields edge higher, and that yield curve flattens, the bigger the concern for equities. Crude oil was pretty flat, up 9 cents on Friday, while gold was still under pressure here, losing another $2.50 at the official close here, due mostly to strength in the US dollar. This is another chart to watch here. I think any trade below Friday's low, and we should get a continuation of this move lower at a minimum back to the 1181 level here, the recent low from mid-August. Okay, now this week we do have more economic data reports due out. On Monday we get consumer credit. Tuesday the Red Book, JOLTS report, and wholesale inventories. Wednesday, MBA mortgage apps, core PPI, crude oil inventories, and the Beige Book report. Thursday, we get initial jobless claims and the federal budget balance. That should be interesting. As well as on Friday, we get retail sales, business inventories, consumer sentiment, and the Baker Hughes rig count. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.